All right, let's get right into it. Today we're taking a deep dive into a really interesting company on the Indonesian stock market, PT Gihon Telekomunikasi Indonesia, or as you'll see it, ticker GHON. We're going to unpack its entire story piece by piece. So why this company? Well, it all comes down to this one number, a dividend yield over 10%. Now, if you're an investor, a number like that, it just makes you stop. It can be a sign of a huge opportunity, or it could be a massive red flag. So what's the real story here? Let's find out.
Okay, to get to the bottom of this, we've got to start with the absolute basics. Before we even touch any more numbers, we need to understand a simple question. How does this company actually make money?
Well, it's actually a pretty simple business model when you think about it. You could almost see GHON as a landlord, but for the digital age. They build, own, and then rent out space on these huge telecommunication towers to mobile carriers. It's the essential physical backbone for pretty much the entire mobile network in Indonesia. And, the company's history shows a really smart evolution. They didn't start out this way. Back in 2001, they were just building towers for other companies. The real game changer was in 2012 when they decided to start owning and leasing the towers themselves. That pivot was huge. It took them from getting a one-time construction fee to earning steady, recurring rent. Then, after going public in 2018, they've just been steadily expanding their reach. All right, so we know what they do and how they got here. Now for the fun part. Let's follow the money, because this is where the story behind that incredible dividend really starts to take shape, right inside the company's financial statements. Okay, now this chart, this tells a fascinating story. You can see that steady, clear growth in revenue and profit. But look, the real drama is in that debt-to-equity ratio. It goes from a pretty risky 1.83 in 2017 all the way down to a super healthy 0.24 in just 1 year. That is a massive financial turnaround, and you can bet their IPO had a lot to do with it. And this chart just hammers that profit story home. I mean, look at this. From just under 37 billion rupiah in 2017, their profits almost tripled to over 100 billion by 2023. This wasn't just a little growth. This company was a consistent, powerful, profit-making machine. But, and there's always a but, right? Every great growth story eventually hits a speed bump. For GHON, that moment came in 2024. For the first time in this whole period we're looking at, their net profit actually went down by a pretty noticeable 15.4%. This is a critical detail, the first real sign of a headwind. I really want to go back to that financial transformation for a second because it is just so central to the whole GHON story. Just look at the difference a single year made. In 2017, the company was drowning in debt. By the end of 2018, they had completely reset their balance sheet, probably using cash from their IPO. It's like night and day. They built a much more stable foundation for everything that came next. So the company had this newfound financial stability and growing profits. The big question is, how did that actually help the people who own the stock? Well, that brings us to the heart of our investigation, the dividend. And really, this quote from investing.com says it all. This wasn't some one-time thing. The company has built a serious track record, a multi-year history of consistently increasing the cash it gives back to shareholders. 7 years in a row. That's a real commitment. And you can see that commitment right here in this chart. And we're not talking about tiny increases either. The dividend per share absolutely exploded from just 20 rupiah in 2020 to a planned 180 in 2025. That is a huge acceleration in cash going directly into shareholders' pockets. Which brings us right back to where we started, that crazy headline number, 10.59%. But now we get the context, right? It's not just some random number. It's built on a foundation of real profit growth and a very deliberate long-term policy of rewarding investors. Okay, so the company's history and its books tell a pretty strong story. But what does the market, what do other investors think about GHON today? Let's take a look at the stock chart and see what the technicals are telling us. So before we look at the data, a real quick primer. Moving averages sound complicated, but they're not. They just smooth out a stock's price so we can see the underlying trend, and they help us ignore all the day-to-day noise. Short-term averages show us recent momentum, and long-term averages show us the bigger picture. Simple as that. And this, well, this is where the plot thickens. It's like the market has a split personality when it comes to GHON. If you look at the short-term view, all the key indicators are flashing sell. The recent trend is down. But when you zoom out and look at the 200-day average, which is a really critical long-term indicator, the signal is still buy. It's a clear conflict between how the market feels right now versus the long-term story.
Okay, we've gone through the business model, the financials, that amazing dividend, and these conflicting market signals. Let's step back and put all the pieces of our dossier together to see the complete picture.
So here's how it all shakes out. On one hand, you have a rock-solid history of profit growth, a balance sheet that got a complete makeover for the better, and of course, that exceptional shareholder-friendly dividend. But on the other hand, you have that recent dip in profit and a market that seems pretty nervous in the short term. And that leaves us right here with this one big central question. The file is complete, but it presents a clear conflict. You have this powerful history of performance running straight into some very recent headwinds. So the question you have to ask is GHON's incredible past a reliable sign of its future promise? That's the question this dossier leaves us with.